What's up, YouTube? Welcome to another exciting video. If you guys are into things like gold and silver, personal finance, please like the video, subscribe to my channel, check out my website, My Road to Wealth and Freedom. The link is in the description down below. Quick disclaimer, I'm not a financial advisor. The channel's for entertainment purposes only. So please do your own research and consult with a financial advisor before making any investment decision like buying gold or silver or following or pursuing any of the strategies I discuss on this channel. Okay, so hey, I just want to give a shout out to all the people who liked and left some comments there in my video there yesterday. I really appreciate it. I've decided I'm going to probably just go with the full ounce like I've been doing. And as I mentioned in my video yesterday, it really doesn't matter. More like I'm in Canada, and the way it works with buying gold up here is that the price of gold can drop, but if our dollar drops, it's essentially kind of a wash, right? Like it's really hard to kind of time, like if you're in the US, gold's price in US dollars. If the dollar, if you have a strong dollar, gold drops, you can kind of make that play. Probably Canada, I think, like most other countries in the world, are probably in a similar sort of situation. Maybe like in Australia, over in Europe, um, in Asia. It's just, so I look at buying gold as basically, if I'm going to buy it, I buy it. I try not to time it because it's nearly impossible to time. And what you gain on the one hand with a gold price drop, you lose on the other with the dollar dropping, or like the Canadian dollar dropping as well. And on the upside, same thing. If gold's up, usually Canadian dollar's up. Canadian dollar is kind of almost like a quasi commodity currency. So if commodities do well, the US dollar is weak. Our dollar in Canada will do very well, and vice versa. So that's kind of where it's at with that. Thanks so much. I really appreciate it. But today, I had an interesting conversation with a guy I know there yesterday, and I don't know how we got onto this discussion, but it came up about our mortgages, and yeah, I'm almost paid off this mortgage. And I think if you guys check out my website, I throw up net worths like every month, and somewhere buried in the details down there is the declining more outstanding mortgage balance. And I think it was around just under 6 grand at the start of the month, and now we're down below five. I think we're at 4,800. So the end is near. Literally, we got a few weeks left to pay, and then we've retired this mortgage. And there's really no better. It's hard. It's almost unbelievable, to be honest. But I just kind of, talking with him, I was telling him basically my reasons. He's a little bit younger than I am, and I just basically kind of told him, my approach, my strategy, my way of thinking about, paying off a mortgage. This is a huge discussion on in the world of personal finance. It has been for, I don't know, decades, I guess. But I just want to kind of get over the math part. So the math is that, hey, if you have an extra, I don't know, lump sum or $1,000 a month or whatever, and should you invest or should you pay down debt? And it's like, whoa, what's the rate of return on the debt? Oh, okay. Or for paying off debt, what's your interest rate? Oh, it's a 2 or 3%. Oh, okay. Well, no, because the long term gains in the stock market are like 10% or something like that. And the issue that I have with that, and I think that a lot of people are going to wake up to, because we are in a housing correction. Housing prices, housing sales have cratered in Canada and the US, and probably even around the world. But I do know in my local area, prices have actually come down about 15-20%, somewhere around there. And I totally suspect that it's going to go a lot lower. Pre-pandemic, housing is up, probably over 40% from 2019, early 2020 levels. That was just unsustainable, and it's going to cause a lot of pain. I really feel like if I was a young person who just get sucked into the mania of buying a house or anything, a townhome, condo, in the last 2 years, I would be royally pissed that my government and my central bank has told me to go out, gorge on debt, keep the economy going, buy a home at like so extraordinary inflated prices. It's just insane that anybody, I just cannot get over what I paid for my, 2-story double garage detached home, is what, people are paying to get, the smallest of townhouses that have condo fees and all sort. Anyway, it's just extraordinary, and it's sad because these are people are going to really suffer when as this thing kind of unwinds. But yeah, interest rates are going to stay low. Feel free to borrow, and then look at what they're doing now: fight inflation, or at least to kind of make it seem as though they are jacking interest rates. All those people who went out and put money on a home equity line of credit, they gorged on debt to do all sorts of things in a pandemic. Yeah, that's basically, you know, this is when these kind of chickens come home to roost, I guess. But anyways, so my point is this. The math does favor investing over paying off your mortgage over 25, 30 years, but that is exactly the problem. That kind of long duration introduces all kinds of crazy like risks, ranging from crazy black swan events like pandemics, wars, financial crises, to just kind of personal crises like, hey, I lost my job and I can't find another one, and I have to take a lower paying job. And I know this the labor shortage is all in the headlines, and workers are demanding more. I suspect that um, that's going to disappear going forward. Sooner or later, reality reasserts itself. So anyway, yeah, that's kind of what I was thinking. So yeah, pay off my mortgage. I sold stocks, which I don't regret. And I miss like the uptick? Did I miss like the huge rally and stuff like that? Yeah, I had no idea that it was going to go to where it went, but I don't even, regret that. Now I'm sitting on a home that's just about paid off, a couple more weeks. All of that risk is off the table. And basically that leaves, my family in a position where we can invest unfettered, without having to worry about, hey, if I lose, 50% of my money in the stock market, um, I would have rather pay off my mortgage. And I feel like there are times in history where things like stock markets have gone down and they just haven't come back. It's taken a long time, and that's the thing. What do all these financial guys, financial advisors not say? They say, oh, only invest in stocks if you're in it for the long term, and if you can handle and stomach the risk. Well, the thing is, there's a lot of people who feel like, hey, you know what? Yes, I can stomach the risk. I can handle the crazy volatility and the price swings. That doesn't bother me until it actually starts to happen. Then all of a sudden, people become more risk averse. You see, people are willing to take, and studies have shown this, all the personal finance books and that, people are willing to take enormous amounts of risk on the way up as prices keep increasing and as the bubble develops. However, the opposite occurs on the way down. All of a sudden, people panic and sell, and then it's the woulda, shoulda, coulda. And if you have a huge mortgage hanging over your head, you have no business playing around on Robinhood, gambling your money away, or on Wealthsimple or wherever, Questrade or whatever. If you're trying to save for a down payment on a home, why are you gambling in the stock market at the all-time high? I don't get that, but that is emblematic and symptomatic of what happens in huge, massive bubbles. And the pain is all over. If you've tried to hide out in the bond market, bonds have taken like a 30% haircut this year. there's real damage that's done. The tech sector is down quite considerably. Some names I saw a thing. Now this was a few weeks ago. Kind of at the worst. I think since then some of this stuff has recovered. But some of those names were down, 80 to 90%. How would you like? How you're never gonna recover that? It's not like things are gonna switch gears and it's all gonna go back to the way it was. And I didn't even mention yet the mess in crypto. How, oh, man, like it's crazy. The meltdown in Luna and even Bitcoin's down considerably. A huge percentage. I don't know, it's like 50% or something like that from the all-time high, and that is like basically like the best crypto out there. So anyway, my point is this: debt is okay until it's not. And for far too long, people have been drinking the Kool-Aid and, really getting away from the idea of ever having to pay back any of the debt that they've taken on. Of course, you should always try to pay off your debt. I don't really believe in inflating the debt at all. It'll just go away on its own. It will just kind of inflate, and that's just not true, though. So, and not only that, when you're dealing with a mortgage, really dealing with the potential that the underlying asset on which the loan was taken out will will fall in value. And when that happens, then what? You're stuck, with a house that you paid $1 million for that you owe 800,000 and it's only worth 600. And, when might that recover? I mean, that's anyone's guess. I don't know. So it's always best to kind of play it safe. I do feel like personal finance is just that. It's personal. You want to be very judicious with the amount of debt that you take on. It's interesting. I read the former Central Bank of Canada head, Stephen Poloz. He just wrote this book, just recently published, I think February 2022. Anyways, he was kind of going through, there's these like 5 big risks. It's obviously debt, deflation, disinflation, technology, what was it? Climate change, demographics as well. So you have kind of these 5, major forces interacting with the economy, and the whole point of the book was basically what you've seen in the last, say 5 years is kind of what we're going to see more of going forward. Huge swings and price swings, massive volatility, in periods of inflation, deflation or disinflation, and all of this stuff. But a very interesting thing, he was going on about how concerned he is about all the debt that everybody has. And anyway, so a couple chapters later, maybe even in his conclusion of this book, I forget where exactly it showed up. But it was interesting because it's almost like he does like a 180. He's like, people shouldn't be afraid of debt, and debt shouldn't carry the stigma that it had in, the 1930s, his grandparents' generation, where debt was really frowned upon. People really understood that debt can really cut you on the way down. Anybody who went through the Depression understands debt more than people today. People today just feel like it's not a problem, but there are situations that have happened in the past, even just a brutal recession. I just find it so strange that people think they can get away with massive debt, and it's all like, it's not just your regular Joe Sixpack. It's like hedge funds being just massively on the wrong side of trades. They lever up like crazy and then they get blown out. It's just, people are just playing with fire, and I feel like the best move we can make now, it's very uncertain. We have high inflation, rising interest rates. It's looking likely that we're headed towards a recession. Will they pause? If they do, that's just gonna exacerbate the inflation problem. If they don't, there's going to be a deep and severe recession, maybe even a depression. Um, Anyways, these are all kind of things out in the wind, and I really think it's hard to it's a really hard time to navigate. Post global financial crisis of 0809, it's fairly easy, right? Just buy stocks, buy dividend stocks. You can hang out in bonds, at least in the early part till about 2011, something like that, and you're gonna do just fine. I remember like one year I made like an 8% return on like a bond fund, or maybe that was 2011 or something like that. Anyways, um, my point is that those were the strategies that kind of worked for that time, and going forward, I don't really see that, and it shows. I think like protecting your wealth, protecting your situation is the name of the game, and we are definitely in really volatile times. You don't want to carry debt. Pay off as much debt as you possibly can. Try your hardest. Don't gamble your money trying to make it big. Picking the bottom on Netflix or whatever. Pay off your debt. Save some money. Have some liquidity. Have some cash on hand. Um, and I would say have some gold and silver if you can't afford gold. I'm more inclined personally to go for gold. Um, Global central banks, banking international settlement. It's a tier one asset now. More and more hedge funds, billionaires, central banks are buying gold hand over fist, and we saw what happened with Russia when they, pulled the gold card. Um, it just seems that the world is, I even find it like, in the past few days, the troubles in the Italian bond market have been, making headlines again. And the interesting is Italy owns, I don't know how many tons, maybe 12, 1,300 tons of gold. And I remember a few years back, they kind of said that, no, we're not going to ever sell our gold to pay off our debts. we're just going to keep this. We're just going to hang on to it. Um, and it's really interesting how, this, it's just a pet rock. It's an artifact of a bygone era. Um, Yet central banks not only do they continue to hold this on their balance sheets, but they've changed its status to like a premier top tier one asset, on par with the U.S. Treasuries and stuff like that, and and they continue to buy, as do certain funds, hedge funds, um, a lot of smart investors, have been picking up physical, and I think the reason is that they see the writing on the wall, and it's not you don't buy gold to get rich. It's just you buy it for like the stability, the kind of do nothing. And I get that too. Like, oh, why'd you want to own gold? Like it does nothing, um, and it's not supposed to do anything. The point is that it's there and it's serving its purpose. Even right now, even the last since it popped in 2020 to I don't know 2070 an ounce. Back in March, or on the back of the Russian Ukraine invasion, it went to about 2050 for a period of time. Then it kind of came back down, and you know, gold serves its purpose. From what I've seen in the last 20 years, it does serve its purpose in times of stress and in instability, financial global instability. Um, it's there, and if you need to get rid of it, there's always a bid. Um, so I think that's important, especially if you're going to hold a substantial amount of your net worth into things like, real estate, bonds, and stocks, and even crypto. And that you should have something that will offer protection. And I mean, it's relatively inexpensive. I mean, an ounce of gold is about what, $2,000 an ounce. U.S., Canada, it's about 20, I think close to 2,500. So I mean, it's not super cheap, but when you compare that to the average net worth of even a middle class, you know, just in real estate wealth alone, which is illusory as far as I'm concerned, and stock market values and stuff like that. Honestly, like what's 10 grand? Buy 10 ounces is 25 grand. It's a drop in a bucket compared to even the average person's net worth. Yet nobody has this. Um, they just don't see the value yet, I guess. And I'm happy to slowly build, slowly acquire. I do enjoy these historical examples of gold. Um, it's probably the coin collector in me, but anyway, I do feel like it does serve a purpose. It will protect us in the end. If it comes to that, it may not. But what is equally important is to get your financial affairs in order. The sooner the better, because there's rough times ahead. That's basically been the purpose of a lot of my videos, my blog. I hope people see value in it, and they heed its message. Live below your means, live within your means. Buy only what you can afford. Um, don't take huge risks. Investing, the personal finance, and all that. It's a marathon. It's not a sprint. And to do things slowly, um, deliberately, predictably, will get you a lot farther than um, than just gambling and constantly trying to, what's the next big thing? How do I beat the market? How do I lever up? Anyway, that's it for today's video. Thanks everybody for watching, liking the video, subscribing to my channel. And I appreciate you guys popping over to My Road to Wealth and Freedom and leaving some comments there as well. Thanks so much. Take care.